Good morning, everyone, and welcome to another live webinar here at MarketMinds Mastery. How is everybody doing today, guys? How is everybody feeling? Christmas, it's around the corner. So let's give it for another 10-20 seconds for everyone to join. Does anyone hold any trades? Good morning, Roomman. Trades. Good morning, Roomman. Friend. Trades. Good morning, Roomman. Friend. Trades. Good morning, Roomman. Friend. Trades. Trader. Morning, Roomman. Friend. Trade. 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 Trader. Morning, Roomman. Trade. Trader. Morning, Roomman. Okay, I think I understand where was the... Is it better now? Or good with the voice? Yeah, it's good now? Okay, perfect. Oh, okay, yep. Hello, Nick. S144. Hello. Okay, great. So, if I see a break of if price breaks this trend line, then it will start showing the pound's weakness here. So far, the US dollar, it's fairly weak. That's why maybe on the majors we're gonna see something different compared to the cross currency pairs. I will explain you in a while, but let's continue with the Euro US dollar. As you see, price, it's still trading within the last Thursday's bullish Marubozu candle, inside. So it's on the lower time frames. It's you can draw a symmetrical triangle, and a symmetrical triangle can break either to the upside or to the downside. Keep in mind that the price is not trending anymore. This swing is equal to that swing over there, or this one with this one. The support is down around 1.07. So we better wait to see what's gonna happen here. All good so far? So next one. For guys, today for intraday trading, just be a little bit cautious that here it's a kind of this trend line there, other trend line here. Price is really compressing within these trend lines on the 15-minute chart. We can draw it a bit more accurately. So where are the buyers? The price is not clearly in a trend. Okay. Australian dollar, US dollar. Australian dollar, it's quite strong. Price makes directional move to the upside, higher highs and higher lows. And I don't expect you to know, but I explain it many times that commodities like the gold and other commodities and commodity currency pairs, they are fairly bullish during December, and it can go until February. So we can see uptrends on the Australian dollar, on the Kiwi, and we like to take advantage on these uptrends. So I'm not looking to sell it, to be honest, because price is moving higher, creates higher highs and higher lows. So I think there is no reason to sell something that it's in an uptrend. Same with the New Zealand. Here it's a trading plan for you. This upward trend line, it's well defined. We have 1, 2, 3, and the fourth point 2 days ago. It's developed a close above the previous high. It validates this trend line. So as long as price is above the trend line, we are looking to buy. If price will dip down and drop around the 61.8 FIP area that I took it from this low, that's the 100% of the FIP, to the 0%, and the 61.8, it's right there. So I do expect this area of confluence to act as a support for a sequence bounce and to take some trades long from there. VI is taking part in Z4. Hello from Kenya. Hello, friend. ZCA, looking forward to your sharings. WM said, what a lovely day, isn't it? Absolutely, it's a lovely day. Fake Ali say, time to gain knowledge here. Absolutely, you're at the right place. USD CAD on a downtrend. Canadian dollar, it's a commodity currency. We do expect to bring strength in the market. This is the 20 period moving average, and I put it on the chart because I just understand that it might help many traders to understand where the trend is. Now, if you don't trade trends, you don't need moving average, but if you trade trends, you can put moving average. I use the 20 on the daily chart just simply to make sure that the price is below the 20 when I want to sell, or it's above the 20 when I want to buy. That's all. Okay, I don't take trades just because the price touched on the moving average. And here it's something that I see when I coach traders a lot, that this is happening. When they use an indicator, they get confused and they want to trade the indicator. that's fine if you are trading a kind of expert advisors or a kind of systematic, you use a systematic approach in the extent of we take only the trades that price touch or interact with the indicator. Let's say if you are trading the crossover of the MACD, then you have to take the trade here because you don't know which one is going to be the winning trade. I don't trade the indicators as per their signals. I don't take any signal from the indicator. I take signal only from the charts with the highs, with the higher highs and higher lows. I use the indicators to validate some signals. Okay. MK said great course for building foundation skills. Yep, thank you so much. So USD CAD, we are still looking to sell. Price closes for 2 days in a row below the monthly support, so it's a strong signal to sell. However, if you do some trend analysis here and find the extensions, price extension from here to there, the 2% already achieved, and price, it might start retracing back. So we identified a strong trend. We don't know if this third bounce will be the last of the trend, so better to be alert and take the trades if they appear at this point here. Let's create a valid trend line. So here is a valid trend line. If the price retrace back to this area, I will keep it as dashed because it's on the daily chart, and I don't want to get confused with the other stronger support and resistance. So this is an area where we will have vast interest to take trades when the price and if the price touch the area. Okay, let's see why this is. Anyway, alrighty. So USD/CHF, another trending market, very clear trend, well defined. Price has some room to come up to this point here. If you want, guys, to take trades on the USD CAD and USD switch today, maybe you can look on the lower time frames. Here it's a good consolidation on the 15-minute chart. If price breaks below the consolidation, we might gonna look to target this area here. If price breaks above the consolidation, I'm not interested because the momentum on the USD/CHF is to the downside. Okay, next one, USD/JPY. Today we likely gonna still looking for short positions on this one. Price makes this lower low, it makes this lower high. Let's wait to see if this lower high will be confirmed as a lower high only if the price today close below this low here. Any questions? KCL said be practical and realistic. I agree with you. Pound JPY, it's nothing here really. Price is retested this resistance at the top and this one here, and it dropped below this support. So this support looks like it's not respected, so we're going to delete it from the chart and we're going to leave this one as irrelevant for the price. Price occupied within this within this yellow and red horizontal. Ideally, how I would like to take trades up here is when this red candle, if the red candle was a small red candle somewhere at the top, then we would like to initiate some trades. But the price now, it's like it touched here and then it touched there and very fast moved all the way down there. Euro pretty much the same. Let's see the pound. The euro Australian dollar actually price is at this support up. It's at this support here, so we expect the price maybe to retrace back to the 20 period moving average to slowly start the downtrend. And euro Canadian dollar, we do see, look at this one here, it's kind of congestion area that we do expect it to break to the downside, and if this is going to happen, keep an eye on that and you can trade it all the way to this support down there. Euro QE price is still hovering around this support. A well-defined pin bar printed rejecting this support at 1.739 something. So after that, maybe we're going to see some push to the upside. The MACD shows bullish divergence. Price makes lower lows and the MACD makes higher lows. What I will be focusing for the next days and maybe next week, it's going to be the pound Oz, pound CAD, pound New Zealand, because the price broke outside of this congestion area. Now it's well defined in a downtrend. Now if any retracement occurred, I will be looking to trade short until this level. Also, I will be focusing on the pound Canadian dollar because now price makes lower highs and lower lows, very well and defined structure. That's a daily support I draw below this bullish engulfing. But again, the strong support is down there because I did my analysis on the weekend and here I found the strong support. So this one here I plotted in case I'm into any trades to take out profits at this point here because it's a strong support. Now if price bounce upwards and respect this downward trend line, I will be looking to sell all the way down there. That's my plan. And of course the pound Kiwi price broke below this strong support, and we want to see price to stay below this support for 2 days in a row. This close, it's not enough. We want the 2 days candle to stay below this support. If not, then it's going to make our trading life a bit harder. But again, then we're going to look for this trend line as well as this moving average. And if price push upward and retest this area here, we will be definitely looking to take some short positions all the way down there. I will show you where. Down here, that's the support. It's too much room for the price to move from the current price. It's about 500 pips, so that will be a good way. After this point here, after this area, I was looking to trade some short positions until this support, but the price action and the reward to risk wasn't aligned together, so I couldn't manage to get into any trade. People, they sit on coaching with me for a few sessions, they all know and learn that one of the most important things we look to take trades is the reward to risk. If the reward to risk is not there, then our checklist with the 6 parameters, it's not going to be applied. And it's something, this is the number one reason in my opinion that traders, they don't make it in the market, because they don't understand reward to risk as retail traders. It's nice to see all this move here, that it's going bearish, 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 and then you're saying to yourself, if I took the trade from here to there, I would have been in this move. But and then you experience frustration, why not to take this trade, or why not to take a trade here below the 20 moving average. It's because, or why not to take this double bottom here. It's because you don't understand the basic fundamentals of reward to risk in trading. And many traders, they go based on the information about the stock market, on going with this X amount of reward to risk because of this and that. But it's totally different when you trade CFDs or when you trade leveraged products. You have to understand that it's something else going on, because if that was the case, then everybody would have been profitable, right? But from your trading experience and from other people you might know their trading experience, that really that's not the case. So it must be something else in these markets. And I learned this stuff purely by experience. They are not written in any book. And that's why I came up with a solid and a very robust checklist that I use every time. But before that, we learn how to really read the markets. And now, for your information, I'm preparing an ebook, very compact, short ebook that I will explain for first time, and I will reveal how exactly somebody must read the market, candle by candle, swing by swing. That's the only way to start reading the market and understand when you will start looking for trades or not. Okay. Australian dollar, New Zealand. Only one trade was good from here to there. Go for 1-to-1 only, no more. Price is above the 20 period moving average. If someone knew how to read the markets from this point here, would have stopped looking for short positions, because the market, it created an opposite structure. This downward trend stopped, and after price, if you see the market stays for a long time around a downward trend line, it means the validity of it means the trend line at some point will break. Like this one here, after, let me show you, price touched the trend line here. After we defined the trend line from here and there, price touched at the trend line here and immediately it sold off. Now price touched at the trend line here and it didn't sold off. Again, touch here, didn't, touch here, didn't, touch here, didn't. So touch there, didn't. We do expect the price that it's going to break above. Okay, and this swing high, it's going to be the relevant swing high. This swing low, it's going to be the relevant swing low, and hopefully we're going to see an uptrend development. First resistance, it's going to be this one here, resistance. Sometimes when I write on the chart, maybe you think that it's like a a doctor's recipe, a doctor's letters. Australian dollar, Canadian dollar, sideways, both commodity currencies. Price, it's really doing nothing here, so I'm not I'm not interested to do anything. Same with the New Zealand CAD. Either it's going to break to the downside or above these weeks, so I'll start looking for new trades. New Zealand Swiss franc, nothing. Australian dollar, Swiss franc, still nothing. You see, guys, I explained you many times, when the price is in a consolidation area, we don't know for how long it's going to stay in a consolidation area. So multiple rejections here, multiple rejections, bearish engulfing with a long upper wick there, and we don't know if the price is going to come down. Okay, we would like to see the price comes down, but we don't know if this is going to happen. That's why trading with the trading trends, not with the trend, but trading trends actually is high probability setups. And the last one, Canadian dollar Swissy, still here. The good thing is that bullish divergence shown, and maybe price will break to the upside. I'm waiting for the price to break to the upside, and then I will start looking for long positions. Gold, bullish month for the gold. Let's see if price will break above this area. Likely it's going to break above this area. That's what we'd expect. WTI price is right now at this downward trend line. Also, it rejects an strong inside resistance. There is a FIP level from here 100% to there 0%, and exactly rejected the 61.8. So there is a horizontal support, so a horizontal resistance, there is a downward trend line, there is a FIB, and there is a price action in place. Today I'm not looking to take any kind of trades here, to be honest. What I like on the 4-hour time frame really is this type of pattern here, when there is a long candle, a long bearish candle like this one, and the price for 2-3 periods stays within the boundaries of this one. I like to sell here with a tight stop loss above here, and to go for 1-to-1 or 2-to-1 at least to target this zone there. So you can keep an eye on that. Usually we see the WTI moves better during the New York trading session. And last one, German 40. I know people are waiting for this German 40. Green and red, green and red, green and red here. It's been one by one candle the last 6 trading days. Bearish engulfing yesterday. Maybe we're going to see some continuation. I really do expect it price under normal situations. The price should break to the downside. So I will have placed a sell stop below the low of here with a stop loss, protective stop with a stop loss above here, and I will have gone for at least 1-to-1 to target the most recent swing low. This is the 15-minute time frame, and that could be a good setup for intraday trading today. All right, guys, that's all from me today. I would like to wish everyone to have a fantastic, not only trading day, but also in general a nice day ahead. I think we won't do the live tomorrow because we will get close to the Christmas markets. They are gonna already start moving sideways, so there is no reason. I prefer to spend time tomorrow to do the private coachings with you guys. If someone is looking for 1 or 2 sessions to correct something on their trading or to learn something important in trading, I will teach you exactly how to read the markets, regardless if you choose to trade smart money concept, price action, whatever you're going to choose to trade. If you don't know how to read the market accurately, the way I will show you, I think I don't want to sound rude or to sound selfish, but I believe the way I explain to people how to read the market, it's the ideal way that it helps them to trade profitably. So we're gonna be back, let's say, also next week. It's not gonna be a big trading week because on Tuesday, on Monday it's Christmas, on Tuesday is a Boxing Day, on Wednesday markets won't be on the won't move that much. Wednesday, Thursday, Friday, it's not going to be any kind of moves in the market. I will see if I can fit maybe some educational content for you guys for the stuff I give for free out. Maybe I can host a live and just go through some trading setups and explain a few things. Why not? I would love to do that for you. In the meantime, if in case we don't do any other live until next year, I would like to wish to everyone to have a great time with your families, with your friends, with yourself, and yeah, enjoy your holidays. I'm not gonna say think about your trading. You're gonna think about trading afterwards. In life we need that balance. We need, when we trade, just to trade. When we have fun, just to have fun. Okay, we don't want to mix these two things. So MarketMinds Mastery and myself would like to say a very, very big thank you to everyone for being here, watching us, supporting us, and we believe that we add enormous amount of value to your trading development. So have a great day, guys, and I will see you very soon. Thank you. Bye bye.